Welcome everybody back to part 2 in a series looking at the latest CoveredCall ETF launches here in Canada in 2025. Get you all caught up to speed on what the latest and greatest is in the realm of CoveredCall ETFs in this great, amazing country of ours. So to do a bit of a recap of part 1, let's have a look at what I talked about, which was Oily by Evolve, Mid-B by Evolve. We have HVOI, the Harvest Low Volatility Canadian Equity Income ETF by Harvest. Their Income Shares series, so single stock ETFs, a bunch with 25% leverage. HHIS, which is the all-in-one solution for all of those single stock ETFs, also by Harvest. HBIX, which focuses on a Bitcoin enhanced income ETF solution, holds Bitcoin with 25% leverage. And of course, it uses that CoveredCall writing to generate income. And a unique fund, right? The Harvest Bitcoin Leaders Enhanced Income ETF, focusing on the various companies that are involved in the crypto space, and with that 25% leverage as well. For part 2, we are going to be looking at Global X and some of their latest funds that they've come out with. Now, for those who are familiar with many of the Global X products, you are probably saying about time with the GLCL, the Global X Enhanced Gold Producers Equity CoveredCall ETF. But I mean, I guess it kind of makes sense with gold getting some rocket fuel behind it, some horsepower behind it, so to speak. It only makes sense for Global X to take a very popular fund like GLCC, which focuses on gold miners and produces a 25% conventional leverage ETF. This fund in particular launched at the end of April, nearing 2.5 million in AUM around time of recording, and of course management fee at around 85 basis points, but no yield to talk about, no distribution yet. Next up is RSCL, and sort of in the same vein as GLCL, the Global X Enhanced Russell 2000 CoveredCall ETF is piggybacking off of another Global X product, which is RSCC, which is a fund focused on the Russell 2000 index. I believe it is the first and only one so far here in Canada. So you get, once again, that conventional 25% leverage, which is really the theme across all of these different fund managers. 25% leverage is sort of the industry benchmark as of right now. Very popular here in Canada, anything with 25% leverage. RSCL, yeah, it's a systematic kind of CoveredCall ETF, meaning it's just you're just writing on the index and nothing more to it. Monthly income, and again with that 25% leverage. AUM, just over 2 million. When was this thing's inception date? Oh, right at the end of April. So again, been around for a couple of weeks. Give this thing some time to develop. Its underlying ETF RSCC is also included in EQCL, which is the all-in-one solution for the all-in-one index, where that fund focuses on investing in developed markets and a developed markets index, an emerging markets index, of course, the TSX 60, the S&P 500, the NASDAQ 100, and then, of course, the Russell 2000 as well. So if you're not maybe as pumped up investing in just the Russell 2000, which are small to mid-cap companies in the United States, but maybe interested enough to get some exposure, then perhaps consider EQCL for investing just in a slew of different indexes that focus on different parts of the market and different geographies. Next up on the hit list is RNCL, another first of its kind here in Canada, the Global X Enhanced Equal Weight Canadian Telecommunications CoveredCall ETF. I think you guys are getting the theme with Global X. Anything that ends in CL has leverage with it. So it has an underlying asset, RNCC, You might think that that has been around for also a long time, like the other funds we have just covered with Global X, but that is actually not the case. RNCC and RNCL have actually come out at the same time, April 30th, 2025. Again, focusing on telecommunications here in Canada. Now, it's a bit of a bold play, or maybe not. Well, I wouldn't say a bold play, but it's an interesting play in the sense that other fund managers have gone for, say, utility constructed covered call ETFs that include telecommunications in it. So think of things like UMAX by Hamilton ETFs. You could also think about Utes by Evolve. They all have some element of telecommunications in it to fall within the utilities umbrella. So the fact that Global X has kind of gone into this realm of telecommunications only, all I can say is it's just a wait and see if that being so industry specific is maybe more helpful than just sticking it with some other utility-centric industries, as I said, using UMAX as an example, which invests in telecommunications, pipelines, or ordinary utility companies, and also railways as well. So you get some industrial-leaning stocks in there as well with, say, UMAX. Utes doesn't have, say, the railways, but it has the pipelines, ordinary utility stocks, and telecommunications as well. And I think I said pipelines. So that's one of them. But RNCC, RNCL opt to just focus on telecommunications. So far in the first couple of weeks, hey, you know what? 3.6 million, not too shabby for a fund that's been around for a couple of weeks. Especially seeing as we've looked at a bunch of newer funds that have been out longer and have less AUM. So this fund will certainly be an interesting one to just keep a tab on. It's not something I think if I'm going to be investing in, say, utilities, I kind of like the broader umbrella, not just maybe specific telecoms, but hey, maybe there's just something there that we're not aware of. Anyway, don't know what the yield is yet. No distribution has come out for this as of yet. So let's keep a weather eye on RNCC, RNCL, see what happens with this fund. To round out some of the Global X latest launches, let's also check out BCC, the Global X Bitcoin Covered Call ETF. So this one very similar to HBIX in the sense that it holds that iShares Bitcoin ETF. But, however, it does not have any leverage on it. But what it does do is it offers semi-monthly distributions. Now, as of right now, based off of its first distribution, if you were to extrapolate that distribution out, if it never changed, which, again, we're kind of predicting here with the crystal ball, so keep that in mind. It could increase, it could decrease, but you're looking at around a 15% yield with it currently, and you're also getting that distribution, or you're getting those distributions more frequently with it as well. Next up on our list is Purpose Investments. Now, again, similar to Harvest ETFs, they have a lineup of single stock covered call ETFs. These guys are actually the OGs of single stock covered call ETFs here in Canada. I would say they were, at one time, I would have considered these guys a niche provider, giving you covered call ETFs on stuff that you couldn't really get anywhere else. So on things like Bitcoin and single stock ETFs. But since then, there's been a lot more competition in that space with single stock covered call ETFs. So some of the latest launches are like YMAG, the Tech Innovators Yield Shares Purpose ETF, of course, Netflix, Broadcom, United Health, Palantir, Costco, Coinbase, Meta, Microsoft. Anyway, it's all there. Anyway, they don't have, say, an all-in-one solution like you see with HHIS. I mean, YMAG is probably the closest that you're going to get to that, but I don't believe it invests in all of these other single stock ETFs that Purpose Investments does carry. So anyway, so a little bit of a different structure in that regard. We won't get into each and every individual fund. Just, again, understand the more you concentrate a fund down, effectively, the more possible potential there is for that unit appreciation. Of course, you get more volatility as well. Yields can certainly be higher, but again, it's based on the construction. Purpose isn't harvest, harvest isn't purpose. Depending on what resources are available, time will tell over the next few years just who is going to do this whole single stock covered call ETF strategy better. Last but not least, we are looking at Hamilton ETFs. We are going to be talking about MIX, the Hamilton Enhanced Mixed Asset ETF. Now, on its surface, when I hear mixed asset, I actually think of Brompton's BMAX, which is a multi-asset covered call ETF. So this touts itself as an all-in-one ETF. Of course, Hamilton has a couple of other all-in-ones, being HDIV and HYLD, very popular funds, one focusing on the American stock market, the other one focusing more so on the Canadian stock market. So this is a 25% leveraged ETF. It has a 0% management fee until April 30th, 2026. And then thereafter, it's going to be a quite low 35 basis points after that, which is great to hear considering that what it invests in are 3 ETFs that are owned by different fund managers. So just keep that in mind. Now, I would imagine these have fairly low management expense fees, especially VU. That definitely has. If that management fee is probably like 0.0, like 0.8 or 0.08, something along that regard. And I take it that these ones are probably also ultra low as well. It recently came out, so we don't have a distribution to talk about or a potential yield. What makes this interesting and why I say it's kind of like BMAX is it invests 60% in equities, 20% in fixed income, and 20% in gold. So I guess it's opting for maybe an investor who is more of the mindset of that typical 60-40 split, 60% being equities, 40% being in fixed income. Well, at least in this rate, if you think 40% is just too much in fixed income, hey, 20% maybe not too shabby. You get also a different asset being gold, and we're seeing countries around the world just buying gold like it's going out of style. With that 25% leverage, a little bit more volatility with it, but at least that 25% leverage can sort of limit the drag that is very inherent to covered call ETFs, which is capping the upside. That leverage certainly helps it out. $3.1 million in AUM. Again, not too shabby for a fund that's just been around for 3 weeks as of the time of recording. Now that you all have seen, not just if you haven't seen it, check out part 1 of this series. And now that you've seen part 2, as to the most recent launches here in 2025 of the Canadian landscape of covered call ETFs. What do you all think of these launches? Which ones are you investing in? Let me know in the comments below. Hit all the buttons of the like and subscribe variety, and I'll see you on the next video.